The latest consumer price index data is due at 8:30 Eastern time. Joining us now with what she's expecting is Michelle Girard, head of U.S. at NatWest. You're expecting, Michelle, I think, a similar number to what we got last month. Nothing too hot at this point, but the what's in it would be a little bit different in terms food might be up, energy might be down. But then I guess year over year, the number could look worse because a flat month drops off of from last year.
Yeah, that's right. I mean, Joe, actually, I think the numbers are not going to look as friendly, if you will, as benign as they did last month. And that's particularly if you look at the core rate, you know, excluding food and energy. We're looking for a 0.3 gain. And that actually we're kind of on the cusp of even a 0.4 gain somewhere, you know, that would be certainly higher than what we've been reading. And it really is going to come from the goods sector, the areas where the tariffs may begin to show itself more fully. And so I think this is perhaps the first month where we might start to see more upward pressure on these price numbers as a result of tariffs that were put into effect in April. And as you said, that year over year rate, which has been really ticking down nicely over the first 4 months of the year, we think will move from kind of a 4-year low of 2.8 up to 3%. And actually, we expect it to kind of keep climbing over the remainder of the year.
So not everyone thinks this will be the month. So there's enough tariffs were in place, even though we did have pauses on many, but enough were in place the way you think that we see it. What do you mean in the good? You said it's going to show up in the good. Yeah, go ahead.
I'm sorry, you're right, Joe. I should to clarify. Obviously, prices you see in sectors for goods, apparel, home furnishings, recreation goods versus services. So I didn't mean like good these are good prices. I meant goods prices for goods, which is again where the tariff impacts would be seen. And so we're looking for a 0.6 gain in goods prices for goods, excluding food and energy, which is pretty firm.
So you would be shocked if it was like as cool as some of the recent. Were you surprised at some of the recent cool numbers? Were you expecting hotter ones than we got, and then they were pretty cool?
I have to say, we've been in general surprised at the relatively benign readings over the first 4 months of the year. I think that to some extent, the economy is held up a little bit better. Consumer demand is held up. We actually, thought that you wouldn't see as much of a deceleration in the price numbers as we saw, again, from a little over 3 down to 2.8. But as I said, unfortunately, now it looks like that may turn. And the problem is, from a risk standpoint, even if the numbers look benign for May once again, there's still the uncertainty hanging out there. Well, that maybe it's just too soon yet to see sort of any impact. As you said, tariffs were paused, but the effective rate of tariffs is still about 12% more than what it was. So we do still see some residual impact. And again, even if it doesn't come through this month, the fear is it will. There's no
way companies are eating it, and that 2 or 3 months from now, we're still waiting. And it just turns out that a bird's got to swim, fish got to fly. There's flying fish.
Politicians got to politic?
Nope. Prices got to. Companies got to pass on price increases to consumers. You would think.
Or push it back on their suppliers. There's a couple of methods.
Well, that's another way that it could.
But that eventually goes on to the.
So I'm naive. I'm naive to hope for that we never see that we get rid of that we soften or decelerate some of the trade fears before we really see them. That's not going to happen. We will see them eventually, you think?
Well, I mean, it'll show itself probably in one form or another. Either the consumer will bear it, or profit margins will be under pressure. Unfortunately, in the short term, as businesses work to adjust and set up longer term, plans that will allow them to effectively mitigate the impact of tariffs on consumers with domestic production. But in the interim, that usually is, there is somewhere that it has to give. Either it gets passed through the consumers, or you see, if they are going to eat it, you see the impact in profit margins. And I think this is, of course, what what the Fed is just watching and waiting to understand exactly how it shows itself. Does it show itself in the form of higher inflation? Does it show itself in the form of profits or companies being more under pressure and having to perhaps cut back on employment or, or production, and you see the economy slow? And this is why the Fed is pretty firmly at the moment, and the best course of action is just to wait and see until we have a better idea of exactly, first of all, what the path for tariffs will ultimately be, and then, of course, how it will actually manifest itself in terms of the economy.
Okay, Michelle Girard, 8:30 is the time, and then we got a bonus tomorrow with another inflation.
CPI, exactly. There you go. And that's where you could see if it's coming through or if it's getting in the suppliers. Where exactly in the production process it may be showing itself first.
Hope springs eternal. Strong economy, low inflation. The flip side, not so great. Higher inflation and a weakening
economy. You do not want that combination.
No, we don't.